Hey, what's up, guys? Came here because I really want to start this new format where it's kind of like a weekly analysis of the previous week, um, along with what I expect for the coming week. And so I really want to get into this new format. Hopefully, you guys could join me along with the ride. Not only hopefully beneficial for me because I want to keep not only just recording this on my journal, of course, but also maintaining a video log of it would be pretty cool. And if anyone watches this, it would be if it helps anybody, in their trading journey, that would be a lot even better because, I wish, I had videos like this that explained it. And so, yeah, I really hope that anyone watching this really gets a good explanation of what I expect. And obviously, these are all my analysis. So I could be wrong. But anyways, previous week, and I want to really show what I had from last week's analysis, is main levels I was looking for is the 49. I was also looking at the unfilled daily gap, which we had at 0425, and then the weekly bearish below. So my format is I like to do it from a macro basis every week, every start of the week. What does that mean? Every Sunday I like to journal what the weekly profile shows. And if you see right here, we're showing some weekly profiles. As you can see, this past week we had Monday off, so it was only a 4-day week. But last week, being a 5-day, and this is a weekly profile, right? And so right, we see a profile of everything combined. And so that's really what I like to do every Sunday. And so from last Sunday, like I said, I had this 49 and this 73 along with the unfilled daily gap. Market just continued to rally this week. Continued to rally. Really nothing much from my end. I really didn't take any personal trades because it was just really, really boring. But for my weekly bullish level above, I was really looking at this 49, and that's what we saw on Tuesday opening. I don't, like I said, Monday it was open, and you could clearly see there was like activity. And if you really see back here, let me see, this was right here. This was Monday, I believe. Yeah, this was Monday. Like you see, there was activity, but again, since it was holiday, I really don't count it. Is this it? Yeah, since it was holiday, I don't count it. And plus, it was a lot shorter. If you see, a lot shorter compared to. But Tuesday, you could see that we opened up, and we straight off, we tested that weekly bullish level above. We were able to respect it, and throughout the whole week, we just continued to rally, close to all-time highs, which is around 63.75. So again, the momentum continues to the upside. There is no reason, and I explain this a lot to a lot of my friends, which I trade with, that there's really no reason to take anything short just because you don't want to go against the trend, right? You don't want to get run over by the train because if the train is going up, in this case, obviously trains don't go up, but if in the case that the train is going, let's say to the right, and to the right means up, you don't want to, you're not going to stop it. You're not going to stop it. So the best thing when it comes to playing short is waiting for it to show and then waiting for a pullback. If it happens, it happens, and you take your trade. If it doesn't, it doesn't. You move on. And so that's what we saw from last week. Obviously, we had this another gap up from Tuesday to Wednesday, so that was something notable. And you could see that the gap up did not get filled. And you could also see here that from Wednesday and Thursday, we were not able to get below that gap, so it shows that strength from buyers as we continue. Over, through the intraday, we can also see that on Friday, the all-time highs, non-adjusted. Keep in mind, this is non-adjusted charts. I don't adjust my charts for rollback or contract rollovers, but 63.75 was the all-time high, and we didn't sweep it. And ever since then, market is aggressively selling off right now. And obviously, I don't want to get into analysis yet because from now till market open, of course, it's only 8 p.m. From market open, it can change. So don't want to take analysis of that. But again, 63.75 all-time highs. We were not able to sweep it, and we continued lower than Friday. Right? I'm not saying that we're now going to see a massive sell-off, but we could see a pullback from bears now. And so into this week, my biggest levels are going to be my weekly bullish level above is going to be 63.75, which this represents all-time highs. I believe that if we are to maintain above this level, we will continue to see momentum from buyers and or bulls, like if you guys like to mention it like that, from buyers, and I do expect to see higher time prices, right? Similar to that, I think my weekly bearish below level is going to be 87.25, and the reasoning behind this level is that unfilled gap, right? If you really see it, we left this gap, and one thing I like to know is that besides this gap, and I've learned this from many trial and error, beneath this gap there could be many levels where this could bounce, many levels. So realistically, I don't see any bear scenario until we get below the last area where it could possibly bounce, which is that unfilled daily gap. And so that's kind of what I'm going to be looking for, my weekly bearish below level. Below that, I'm going to be using last week's prices, or last week's 2 weeks ago's weekly prices, to really acknowledge where we stand. And so these are kind of just like targets and stuff like that. I'm really, the reason I have it white is why I always put it for the weekly profiles. So these levels are going to be levels based off the weeklies, So right here, I believe that we get above 73, we should, or below 73, we should see lower into that unfilled daily gap. The same with this 70.49. The reason I kept it is because you can see how it was respected, and so I keep levels that maintain their respective levels. And so if it's not respected, then I take it off, And so now with that weekly, I like to dive deeper into into my daily profiles. And so these, obviously, as you can see, these are daily profiles. You see a little bit more. What you see here is a TPO along with a volume profile to the right and along with delta, right? One thing I will say is that I got my chart inspiration from a guy I follow on Twitter, and it's this guy right here. And I followed him on Twitter, and ever since then, I really recommend. Right, obviously he's not a friend of mine or anything, but one thing is that I really got a lot of the chart inspiration from him. The trading analysis, I do it for my own, but obviously there's my Twitter and stuff. But let me see right here. This guy's a life changer, honestly, and so that's really pretty much where I got kind of my analysis. I don't really copy his levels and stuff like that. I kind of just like to do it on my own, and then I like to reflect on what he does. Sometimes he gives really good insight, so I like to read. But similar to that, just this is where I got my inspiration. So I'll just fair to shout him out because it's a lot of help. So I don't know if he'll see this, but anyways, don't want to get copyrighted or anything. But basically, this is kind of what I'm looking for, right? Intraday bearish below. Keep in mind, weekly bearish below. And right now, we're opening below it. But again, this could change. This is due to change, so we could see a balance overnight. So that's why I don't really want to take in count overnight's action, although we are seeing a massive sell-off. But intraday, 45, this is kind of, we have this double distribution. And if you see it here, I wish I had a marker to draw here. But if you can see right here, this is one, and this is a double distribution. Above this, if we're able to get above into this upper distribution, I do expect some intraday bullish action. That's why I have that 45. Along with the intraday bearish below is kind of that level where we saw, remember, keep in mind, this is where we bounced, and you saw in the weekly profile, this level right here where we were maintaining. So if we're able to see below that, I do expect some intraday bearish below action. At the moment, we're opening right below those. And so one thing I do like to say is if we open below both the intraday and the weekly bearish level, I do expect a very, very bearish day, just based off the context I've traded and stuff like that. And so, those are my weekly expectation, my weekly levels. Another thing I would like to know is definitely news. This is a very news heavy week, and I don't expect much action until probably Wednesday afternoon. Like I said, I'll still be trading Monday and Tuesday, but don't expect the biggest action. And in the case that you're not really good at trading consolidation or low volume days, size down. Sizing down won't hurt you. If anything, you're protecting your capital. So, like I said, the reason why I expect a slow day is Wednesday. This is the biggest news right here. At 2 p.m., we see FOMC decision, and obviously they're the ones that control the interest rates in the economy. So it's going to be a very important thing. And usually the market doesn't move until that day. You'll see a lot of consolidation. And let me see. I'll give you a perfect example. FOMC meeting. Stick with me. Stick with me. I believe it was on the 17th, 18th, if I'm not wrong. 17th, 18th. That's what, according to this, it's saying. It's once every month. So, yeah, FOMC was around 17, 18. So, if you would like to see something, let me see if I could go all the way back to the 17th, 18. I don't think I have it all there because the contracts got rolled over, but I can pull it up on this chart right here. And so if you do see up to the 17th, 18th, sorry for the delay, genuinely. You can clearly see that the market really doesn't move much up to that day. And This is, I believe it is the 17th, 18th. I could be wrong, but like, let's say this is the week. This is Monday, I believe. The 15th. Let me see. I'm sorry for this delay, but okay, 16th, 15th, 16th. Yeah. So on the 5th. Oh no, this is not December. I'm so sorry. I'm so sorry. I'm very, very sorry. Okay, there you go. So this is the start, right? You can see this is the start right over here. And I'll keep it like this, but as you could clearly see, right, Monday you don't really see much volume. Look at the volume, how dead it is. You can even see Tuesday, but Wednesday, that's really when we had FOMC. That is really when we had FOMC on Wednesday, and so you could just see the amount of volatility that comes after that. You can see the largest move, especially in that afternoon when he is speaking. So, like I said, don't expect much volatility until after Wednesday. But again, I'll still be looking at the market in the case that there is something that presents itself. Another thing I like to look at my analysis, and this is going to be the last one, is the volatility index. As you can see, overnight we are rallying, right? Like I said, the volatility index is a very big gauger of like when the appropriate volatility comes in, and sometimes it even likes to point bottoms out. And as you can see, back in the 4th of December, that's the last time there was a bottom. And so 4th of December, you can see that sometimes when it hits these bottoms, you can kind of see. And so that's kind of that level I was looking for, 1645. But again, heading into tomorrow, it's going to be pretty important. Some levels I have in mind is going to be that 17.2. If we maintain above this 17.2, then we should see bears still have some momentum to the upside, and so, or downside, sorry. And keep in mind the volatility index is, and I once again I really do apologize if I'm stuttering a lot, or if I'm um, repeating myself. Obviously, I don't really record YouTube videos as often, but um, yeah. So please um, be patient. Sorry, but yeah. Tomorrow, as you can see, like I was saying, the volatility index, it's kind of like an inverse of the market. So if the volatility index goes up, market goes down. Vice versa. If the volatility index goes down, the market goes up. Right. And so as long as we maintain above this 17.2. The reason why is because, as you can see, these many bounces used to be even rejection points. If we're able to maintain above 2, I do expect some targets to the upside, and we can even do those together right here. Um, 30-minute, I do expect maybe kind of, it's rejecting overnight actually pretty nicely. So 16.5, I like to keep it in increments of 5. 16.5, as you can see, we rejected it here, we rejected it here, and even got close to rejecting it here. So those are kind of some levels I'm watching for the volatility index. Again, as long as we maintain above 17.2, we should see continuation from bears to the downside, and even the most bearish scenario would be if we're above 17.6, so, or 17.65. So that's something to really keep in mind. And I really have used this volatility index to my advantage, and it has helped me gratefully, and kind of sometimes seeing when there's an edge and there's not an edge, right? And so keeping that in mind, 17.65, 17.2 is for volatility index. Once again, to go over my weekly levels and my intraday levels, 87.25 is going to be that unfilled daily gap. It's going to be the weekly bearish below, and that intraday bearish level is going to be that 611 or 6111. 61.45 intraday bullish level, showing that double distribution, and then the weekly bullish above level is going to be 61.6375. So, like I said, wanted to keep this video short. Hope you really enjoyed it. It's just gonna be an analysis for this coming week. I'm gonna maintain, or try to maintain, uploading this as much as possible and keeping it as short as possible. But please, if you really enjoy this, let me know. Like I said, I probably won't have many viewers unless other my friends. So, but if this somehow gains traction, and if you really enjoy what you're watching, let me know. And yeah, best of luck. Patience this week. They're going to be a news-driven week after Wednesday, especially with lots of volatility. So be patient. Wait for the market to come to your levels. And yeah, peace out.